Currently not collectible. There are many times when you agree to owe the IRS, but you can't pay due to your current financial situation. If the IRS agrees you can't both pay your taxes and your basic living expenses, it may place your account in currently not collectible (CNC) status. While your account is in CNC status, the IRS generally won't try to collect from you. For example, it won't levy your assets and income. However, the IRS will still assess interest and penalties to your account and may keep your refunds and apply them to your debt. You'll also continue to receive an annual bill from the IRS as required under law. Before the IRS will place your account in CNC status, it may ask you to file any past due tax returns. If you request CNC status, generally the IRS may ask you to provide financial information to review your income and expenses and decide whether you can sell any assets or get a loan. The IRS may collect the balance you owe if your financial situation has improved when they conduct an annual review of your income. The IRS can attempt to collect your taxes up to 10 years from the date they were assessed. The IRS may suspend the 10-year period in certain circumstances. The time the suspension is in effect will extend the time the IRS has to collect the tax. While applying for CNC status, the IRS may ask you to file any past due returns. The IRS may ask you to complete Form 433A, Collection Information Statement for Wage Earners and Self-Employed Individuals, or Form 433F, Collection Information Statement, and/or Form 33B, Collection Information Statement for businesses before making any collection decision. The IRS may require documentation to support items listed on your collection information statements. The IRS will continue to charge monthly late payment penalties and interest on your account. The IRS will require you to continue to make your estimated tax payments and federal tax deposits on time.